Hey folks, Dan Frio here, the rate update. Today is my first live broadcast, and the whole gist of this was we've been seeing a lot of realtors lately, and the concern out there is there's tons of pre-approvals out there, but there is nobody accepting offers. And I had a recent video that I did with a realtor, and I asked her specifically, why aren't people accepting, especially FHA and VA offers? So, and that's one of the areas we're going to talk about today, as well as other things that you guys have to ask. So I know I'm premature a little bit, and I really normally posted or originally posted on there that the video was going to start at 3:30. Then I posted on Facebook, it was starting at 3. So I got right in the middle. So we're going to wait for people to join on. But I just want to tell you a little bit about myself for those that are newer out there. My name is Dan Frio. I do the rate update every day. And what happened is I'll kind of give you how we got to this point. As I used to be on radio in Chicago for about 15 years. I was on Christian radio and WIND radio. And it stopped working. But I would take all that data and I would put it onto YouTube, and the subscriptions started going, and my count started going, and my video views started going, and that's where it put us today. So I basically stopped the radio part and I started on YouTube, and we're reaching basically clients all over the country to help them out with all their mortgage needs. So the basis of today's video is how to get your offer accepted, but we're going to answer a ton of additional questions on top of that. So I wanted to break it down to say, have people ask me questions from first-time home buyers. What's the process? Or, we get a lot of times is what's today's rate? What credit score is needed for X amount of programs? What is the minimum down payment needed for a loan? So those are all the things that we're going to answer today, but we're going to give it just a little bit of a pause here to have people kind of join in and start chatting. So if you're out there and you have a question, please post that question to us. But what I do every day is I analyze what the market's doing, and I'm trying to predict where mortgage rates are going. So it's like trying to predict the best stock to pick. If we could get you a better rate on your mortgage or save you a couple $1,000s on your mortgage, that's going to pay off over a 30-year time frame. So if we can get you a better rate or put you into a specific program that is beneficial for you, it could save you a ton of money. One example of that is I did a comparison for somebody that ended up going with an FHA loan. And FHA is needed in many cases, but in their case, they qualified for a conventional loan. So when I did the breakdown, they would end up paying about $30,000 more on that loan. I think it was the analysis I did was over a 10-year pay period. And, so if you don't, you're going to have some lenders maybe push you into an FHA loan when you don't need to. So those are some questions that we're going to answer today. So basically, it's kind of no holds barred. Just ask any questions that you do have, and I'd love to answer those. But the biggest thing we want to talk about today is why so many people are not getting their offer accepted, and why. So again, let's just wait for 3:30. But if you're on here early, cool for you. You're going to have a platform here to ask any and all questions that you have. I see the DA just joined us. Don't know what that means. Hashtag don't savor. So maybe that means something to you out there. If you have a hashtag or Twitter account that people are following on that, I'd love to know on that. But ask any questions that you have. But let me just go down while we're waiting for some people. One common question I get on a daily basis is this particular call. Caller calls in and says, Dan, what's your rate today? I don't know. And the truth behind all that is I don't know, because there's a lot of components that go into your mortgage rate. What we do on here, and why a lot of people follow me, we just hit over 1 million views, is I focus on the components of the mortgage rate. So let me break down the mortgage rate for you right now while we're waiting for people to come on board. Is your mortgage rate, there is no one size fits all. There is no, I can't go in there and say today's mortgage rate is 2.99. There's a lot of adjustments to that. What we do, we call those loan level price adjustments. So what we focus on our channel, and I'm going to show you what I monitor on a daily basis to share it with you guys, is right here. We monitor this on a daily basis. And what this is you can see it says MBS right here. What that is, it's a mortgage-backed security. It's a bond that trades on Wall Street. You might even have it in your investments. That is the biggest component of your mortgage rate. Okay, so it's not the 10-year Treasury. Believe it or not, the Federal Reserve has nothing to do with mortgage rates. They control what's called the federal funds rate. It is not a part of your mortgage rate. So what we follow on a daily basis is basically this. The MBS market right here, okay, this is the bond right here. It's trading and it's live. I can show you. This will probably move as we're going live. Okay, so your mortgage rate consists of the yields on the mortgage-backed security. So as the price goes up, and any time if you watch my videos, you get a chuckle out of this. When prices go up, what happens? Rates go down. There's an inverse relationship. So as the mortgage bond price goes up, it creates or it brings down the yield on that bond. And in this case, it would drive down your mortgage rate. Okay. So you can see right here that we had a rally into May. And what happened right in this time frame here was when the Federal Reserve came in and they had their meeting. And there was fear of inflation and there was fear of tapering. And we'll talk about tapering here a little bit later. Let me note that down so we can talk about the tapering. Okay. So what happened going into that meeting is we had a reprieval because everybody started freaking out that the Federal Reserve is going to start tapering, meaning they're going to start reducing the amount of mortgage-backed security bonds that they are buying. All right. So when that takes effect, when they got a fear of that, they're thinking the Fed's going to stop buying these bonds. It deteriorated, pushing down the price and up the yields. Up, in essence, your mortgage rate. Okay. So then what we saw is a rebound in the market because the Federal Reserve came out and Wall Street and everybody came out and said, okay, things aren't so bad. And the Fed's not going to really do anything. So we had a nice little reprieval in the markets. So then all of a sudden in June, the same thing happened. We had fear of inflation and fear of the Fed tapering, and we had a plummet in that again. And again, remember guys, when this is going up, rates are getting better. When this goes down, rates are getting worse. Okay. So that happened last June of last month. And then what happened? We actually had a reprieval, and then the Federal Reserve came out and everybody started saying, we're not going to focus at all on the inflation numbers. We're going to just focus on employment. So rates came all the way back down and they actually got better. We're at a 5-month low right now. Okay. So that's what's happening on the mortgage rates. However, today and tomorrow, the Federal Reserve is meeting. So I just posted on YouTube a poll. What do you think the Fed's going to do? And the first thing you're going to say is, Dan, you just said the Federal Reserve has no dealings in your mortgage rate. You're exactly correct. But what they do have a control over is some of their bond yields. And they kind of, how do I want to explain this in layman's terms? When you're looking to invest, let me just go back to Bonds 101. When you're looking to invest, there's, let's say, stocks and bonds. Okay. In the bond market, you have mortgage-backed securities and you have corporate bonds. All right. And you have treasuries. So why I also follow the 10-year treasury right here is it is a competitor versus the mortgage-backed securities. So if you're an investor and you're saying, I want to buy a bond for its safety, then you start looking at the yields that you get and the longevity of that bond and so forth. So you can get a 10-year treasury and get a 1.23 yield on that, or you can get a mortgage-backed securities at a 1.77. What are you going to pick? Well, especially if the mortgage-backed securities that you're choosing are AAA rated, well, you're going to pick the higher yield. Okay. So that's why a lot of people are moving out of the U.S. Treasuries right now into the MBS market, mortgage-backed securities market. Even that's additional people buying into the mortgage-backed securities market on top of the Fed. So all of this, what I'm saying is there's investors jumping into this, and there's also the Federal Reserve jumping in and buying up the mortgage-backed securities market. And you can see prices are going up and yields are coming down. The Federal Reserve they're meeting today, and they're going to come out with a report tomorrow to say what they're going to do. The assumption is they're not going to do anything because the employment numbers aren't coming in that great. Inflation, they said they're kicking that can down the road, so they're not going to worry about inflation. They're just going to keep buying mortgage-backed securities to the point where, they don't have to. And when that time frame is going to be, my prediction is the end of this year and the first quarter of next year. So that's that part of why mortgage rates are doing what they are. So I had a question today on YouTube is, Dan, what do you think mortgage rates are going to be, where are they going to be in December? Well, honestly, it's an educated guess at this point, but I don't really see anything going on or changing in the mortgage market, especially mortgage rates, until probably about between December and February, because what's going to happen during that time frame is you're going to have forbearances end, you're going to have student loan deferrals end, and you're also going to have part of the CARES Act, the excess stimulus paid out to people that are not working, all that is going to end in September. So when you now go back to the point where you're not getting the excess income from the Federal Reserve, your student loans now have to be paid again, and you have to go back to making your mortgage payments. The markets are going to start to stabilize, and we're going to start getting back to as normal as we possibly can. So that's basically my spoof right now on the mortgage-backed securities markets, and also in where we are with, how I try to predict where mortgage rates are going. I do that. I read newsletters. I watch YouTubes and news every night. I dive into databases and everything else to watch the economic numbers, because I want to stay tuned into what mortgage rates are doing. So let's get into anybody on here. Please ask any questions that you might have. Here's one from Tiffany. If I buy now, I will never have to shop for a better rate unless it goes to 1 or negative. That's a great comment. So I do get this. Thanks for the post. You're right. So the refinance market for us is a pretty big market. What you got to look at is you get into that mortgage. Down the road, you might need some money for college or things like that. That's the counteractive. If you have your house, all right, and you financed it, and you got that low rate. 20 years from now, you might need a bunch of money, and your mortgage might be the way to tap into that. Home equity loans in today's market are kind of hard to get. So what 20 years from now is going to where things are going to be, I don't know. But you are correct. If you get a rate today, it would take a lot for you to get out of that mortgage. Here's what's happened a lot, Tiffany, is I'll have people call me saying, I'm looking to pull out some cash and do this and do that, or I want to refinance. Why? I try to analyze it to say, and I always say this, so if you ever worked with me in the past, I hopefully you heard this from me. I like to put you in a loan that I would personally take. Okay. So for example, Tiffany, if you took out the loan and you're at 2.5%, 10 years down the road, you need some extra cash. Well, I analyze it. A lot of mortgage people don't analyze this, but I analyze it and say, okay, here's where you are now. Here's what your new loan would look like. Does it make financial sense to do this? And then we can kind of have that debate at that time. I'm not only looking to try to do your mortgage, I'm also looking to try to put you in a better position. My goal is to take your debt. You have the debt. I didn't create that debt. I'm not trying to put you in any more debt. What I'm trying to do is structure that debt in a savvy way that is, benefit to you. So for example, I posted on YouTube one day and I'm like, okay, guys, what rate or what number is higher? And I said 18, 10, or 5. And people thought it was, there was a gimmick there. I'm like, no, guys, let's say you have an 18% credit card and you can get a mortgage rate at 3. Which one should you do? Well, most people are going to say, well, it would be stupid for me to pay off that credit card at 18% with a 3% mortgage, because why would I want to pay on it for 30 years? That's not my point. Okay, my point is, why not take advantage of that lower rate? And here's what I mean by that. Why did you use those credit cards? Well, you use those credit cards because you're spending more than you're earning. That's just the way it is. That's how, if you're running up a bunch of debt with your credit cards, it's because you spent more than you earned. Okay. I'm trying to restructure that debt, and I'm not trying to put you on a 30-year term, take a credit card and put on a 30-year term. But did you know on your credit card, it's probably going to take you about 16, 17 years to pay it off if you make the minimum payments. So my goal is to consolidate all that into one, drive down your payments substantially, to get you your income and your spending even. And then once you figure that piece of the puzzle out, then you can start prepaying your mortgage, so you don't have a 30-year term. I did an analysis, and I posted it actually on YouTube, and I showed how if we refinanced you, we could get your house paid off and all your credit cards paid off in 15 years, versus if you stayed with what you have and paid the minimum on your credit card, you'd have your mortgage for about 18 to 20 years, and you'd have your credit cards for 16 years, and all that money just got blown. So hopefully that makes sense. So let's go on to the next one. Sorry, I'm old, guys. I got to put on my glasses. The next one is, how much money do I need as a down payment? Great question. So here's the down payment parameters on loans. If you have a VA, if you were a veteran, God bless you. Thank you so much for what you did and what you're doing. If you're a current veteran, on a VA loan, there's no down payment needed. 0. I'm going to dive in a little bit more and dissect this because you're going to need more money than just your down payment. So let's hold on to that for a second. So VA at 0. USDA, believe it or not, it doesn't have to be a farm. I did a condo out in one of the suburbs of Chicago, and I did it under a USDA loan, 0 down. Okay, so the 0 and 0, USDA and VA. Now, if you're not a veteran or you don't live in kind of the country or a rural area, the next best thing is Fannie Mae and Freddie Mac both have a Home Ready and a Home Possible loan, and that's what we call it internally. That's the name of the programs. You only need 3% down, 3%. Okay, that's it. Then the next tier down would be FHA. FHA requires 3.5% down. Okay, so the old adage, you need 20% down. No, you need 5% down. In some cases, you need 5% down if you're not a first-time home buyer or some other parameters. But also the first-time home buyer piece, some of the guidelines read this: you cannot own another home at the time that we close on this loan, your new purchase. So you might, and they consider that kind of a quasi first-time home buyer. So you can get away with the 3% down. But the next tier down would be the 5%. So if you have other real estate and so forth, and you're buying a house, you can get away with 5% down. So let's dig in on that a little bit. But I do want to focus back on how to get your offer accepted, or better chance of getting your offer accepted. But let's go over the down payment piece things real quick, because I think we have a lot of home buyers on here. You're going to need these pieces of the puzzle. Okay, there's the down payment that you need. So let's say you need nothing down. Okay, you got a VA loan and you need no down payment. That's good. I have no money, so I can buy a house. No, doesn't work that way. You're going to have other costs, and let's break down those costs into 2 other buckets. Okay, your lender fees and costs, and then your legal fees and costs. I don't have anything to do with your legal side of the equation. The attorneys usually take care of all your title work or the legal part of the equation. I got nothing to do with that. So watch, because some lenders will try to dupe you in putting those fees really low. And then you're comparing it against mine that are accurate. And then they're going to say, see, we beat that place by $2,000. Well, I had nothing to do with that. Those costs there, that's your attorney. Your attorneys handles all the legal things. You'd have to work with them. So a lot of people are getting duped because they're saying, well, their closing costs are less than mine. In most cases, no. It's actually to the penny the same. So you have lender fees. Lender fees can range from about $1,200 to about $3,000 or $4,000. That's what I'm starting to see today. So again, if you have a VA loan, no money down, but you might have lender fees of, let's say, $1,000. And then you might have legal fees, and don't be freaked out of this. In some states, like Florida, has huge title fees, and that's the legal part of the equation. You might have $3,000, $4,000, $5,000 in those fees. So between those fees and the lender fee, you might need $5,000 or $6,000, even though you're trying to qualify for a VA loan with 0 down. So let's get to the next question. Sorry, I'm going to start schooling. Which will help my offer accepted? Offering more than asking, or increasing my down payment, or both? Great question. Okay, so this is kind of going on the realm of what we're looking at. So I'll answer your question now, Nelster. I recently went out to a Century 21 office and said, why won't anybody accept an FHA or VA offer? And basically it came down to, they're just afraid of the appraisal. Okay, but let me, because FHA appraisals are a little more in depth than a normal appraisal, but that's the only thing that they really came back with. And I'm like, well, if the house is fine, what do you care? But asking price. Here's the problem with the asking price, or putting more down. Putting more down might help. Your program that you're going with is the one catalyst that they're looking for. Most sellers are looking for a conventional loan because they're brainwashed by maybe you guys, the realtors out there, and or just media saying conventional loans are much better than FHA loans. There's nothing wrong with an FHA loan or a VA loan or a USDA loan. It's all the same thing. I would be very reluctant to offer more money than what they're asking because of this. Here's what's happening on the finance side. So the people list their house for $250,000. You go in there and you're giddy because they accepted your offer at $270,000. Okay. But if the realtor did their job the way they should have, they listed it at $250,000 for a reason. That's what it's truly valued at. However, you might be willing to pay 270. Me as the lender, I'm going to wait for the appraisal to come back. Most cases, the appraisal is going to come back at 250. Now the dilemma that you have is, I'm not going to lend on the higher value that you accepted. I'm going to do my loan based on the appraised value or the purchase price, whichever is less. That's how all the lenders do it. So let's say you buy this property and you offered $20,000 more than it appraised for, you're going to have to come in with that extra $20,000 on top of that. So I would be very hesitant to do that. And I'm not really sure if any buyers are really paying attention to how much money you're putting down, because 99% of the time, if you back out of this and you have a good attorney, if you back out of your purchase agreement, and you have a good attorney, your attorney is going to get all your earnest money back. So that's the answer to that question there. So let's go down. What's a really good credit score to buy a home? Great question. Everybody thinks, or everybody strives to have an 800 credit score. My son even asked me one day, he's like, Dad, this is driving me nuts. I can't get over 800, like the 810 or whatever. And I'm like, so why do you need such a high credit score? And there wasn't really an answer. Just, I thought, 800 was the greatest in the world and so forth. Well, it's a great credit score and it's something to strive for. But here, let me just give you some ideas on credit scores and how, and this ties into also what your mortgage rate is and everything else. So there's different buckets when it comes to credit scores. So we're going to start all the way at the top. 740 credit score is as good as it gets. Okay. You can have a 740 or an 810, and your mortgage rate is going to be identical. It's basically, you got an A on your test. Okay. You got an A. It doesn't matter if you squeaked it out or you got a 91 or you got 100 plus extra bonus points and got 103. You got an A. Okay. The next tiered bucket down is how I reference a lot of this is 739 to 720. That is a B. Okay. Then there's 719 to 700 is a C, and then below 700. So I'm not saying 700, 699 is a bad score, but that's how a lot of this works in regards to mortgages. Now, when you start getting down into lower 600s, you start getting some issues. And here's what I mean by that. You need a 580 credit score to even qualify, get on the board for an FHA loan or a VA loan. Okay, period. So it doesn't matter. You need a 620 credit score to get a conventional loan. Okay, so if you're going to strive for something, the first thing you want to strive for, if you have bad credit, is to get it over 580, so at least you can qualify for something. Then the next thing is 620. Then from 620, I would say reach for the moon and try to get your scores up to 740 as much as you can. Once you hit 740, don't freak out if you have a 799 and you can't get to 800, but that's my explanation on mortgage or credit scores. So let's go to the next one. If I just graduated college, would I qualify for a home loan? Yes, you will. Here, let me see if I can lump a few of these in the same thing. Appraisal, my friends, 15 years, money instead. Okay, let me go over to that one. So here's what's happening. It's kind of goofy, but it's the guidelines. I don't make the rules. I'm just giving you guys what the rules are. So if you're in college and you graduate, we can actually close your loan with an offer letter and the information from your college to prove that there was no big gap in when you graduated to when you're going to work. Okay. So the job gaps actually freak everybody out in the lending world. So here's what doesn't make sense, but here's the rules. To use part-time income, you have to be on the job for 2 years or in the same line. So let's say, for example, nothing against this. You work in Walmart, the Walmart deli, and you left Walmart's deli and went to Target's deli and you work part-time. As long as there's no job gaps, we can use it. We can use that income. Okay. The next piece of the puzzle is everybody is always saying, I need to be on my job for 2 years. No, you don't. In some cases you do. But let's say you graduated college, you have that degree, you have your transcripts, and you have a job offer, we can close on your loan. Some lenders are going to wait for you to get a paycheck just to validate that for sure. But you can get a loan based off of that. However, if you have a full-time job, a 40-hour-a-week job, and you are a credit analyst, and you scrapped that and went to work at Walmart as a greeter, can't really use that income, especially if there's a big job gap. You might be able to. Every scenario there's a little bit different, but I don't want to drive you down or take you down the wrong path. So there is a little bit of variance there, but I would highly suggest you call us, talk to somebody at the Frio team, let us give you the guidelines behind it. We even have underwriters right on staff that we can kind of get the basics behind it, send it to them, and within 15 minutes we'll have an answer for you. So great question out there. The next one is, let's go. The sunroom. The sunroom can be appraised as basement. Sunrooms have power outlets only. Don't get that one. So let me explain to you a little bit about the appraisal pieces. And I had this one just the other day. Somebody called and said, this appraisal's terrible. I want to see maybe how we can increase this value, because, the appraisal, I have 4 bedrooms and the appraisal only says I have 2. And the first thing I thought of, well, is it below grade? Okay, so here's what you do. You look at the house. If a half of the basement is underground, okay, or below grade, they don't use that in any part of the appraisal other than they kind of give it one little section and say, it's 1,500 square foot. They break it down per what's down there, and then they give it value, but is not counted as a bedroom. It's not counted. The specific rooms in the basement are not going to show as a count in the house. The biggest thing most people argue with is bathrooms and bedrooms. So if they're below grade or mostly below grade, they're not going to be on the appraisal. So the one about the sunroom, as long as the sunroom's part of the house, it has electrical, it's indoors and so forth. It might be screened in, like my parents have a screened in porch, but it is built into the house. Yeah, it is added to the square footage of the home, and it is also part of the value of the home. Just give you a little caveat behind that. I argued my real estate taxes one year, and they said, and I was arguing the square footage. So we went through it. My front porch, because it is part of the house and there is a roof over it, is considered living space. I said, well, if you're more than welcome to sleep out there for a week in December, and if you deem it's livable, I have no problem paying taxes on it. So that was my comeback to the assessor's office. So the next one, should I accept the appraisal of sunroom of the same? What? Should I accept the appraisal of sunroom of same price square footage as basement? I'm not sure what you're saying there. So my apologies. I'll try to, if you want to email me, if anybody after this wants to email me, I'd love to answer any questions that you have that I maybe didn't thoroughly go through. My email is right down in here. You can see it scrolling below, dfrio, which is FRIO at preferredrate.com. So let's go up. How is the MBS market going to handle the Jackson Hole meeting with the Fed? Guys, I don't know. And that's a great question, because I think at the Jackson Hole meeting, for those that don't know, all the bigwigs go to Jackson Hole and they talk about the economy and business and everything in general. If the Federal Reserve is going to taper, that's where they're going to announce it. And I don't know if they're wanting to spook the markets anytime soon, because now we have COVID, the Delta strand starting to go out there and whatever. So I don't think they want to throw any more fear or uncertainties in the market than they have to. So I don't really think it's going to affect anything. I don't personally think it, but if they're going to announce tapering, that's where they're going to announce it. And if you don't know what I mean by tapering, just ask the question in here, and I'd be able to go over that in more details if you guys want me to. So let me just go over what the concept of the video was going to be. Is I met with Century 21 affiliated in Rockford, Illinois. Great company, great group of people. So if you're looking for a house in the Rockford area, I would highly suggest you reach out to those guys up there, guys and girls. Give me a jingle if you want. Apply online. We work with them as a team up in that area. So I'd love to do the pre-approval for you and then send you on your way up there to those guys up there to help you find a house. So here's what's been helping with us getting our offers accepted. And if you're a realtor on here, this is one of the reasons why you want to reach out to us and get us involved in your business. We're looking for partners out there in the realtor world. We have a system called List Reports that is fantastic to help you get rid of or sell your listings. Right now, you don't have that problem. You get a listing, you put it on the market, you get 50 offers within 2 days, you sell it. I was talking with Deb Lemick in Century 21 in Rockford, and she's like, I talked to her the other day, and she's like, oh my God, I got another offer. I'm like, what do you complain about? She's like, I'm running out of houses to sell. And I'm like, well, at least you're selling them. So kudos to you there. Here's what's helping us, and I'll kind of give you the secrets behind the scenes. What we're doing is when the realtors are presenting an offer, they're copying us in to the seller's realtor and attorneys during that process. They're sending in their offer letter, and they're copying us in on it. What we do at that point then is we chime in and we give basically where we're at with the loan, where I want us to be. So if you're out there, you're looking to buy a property, here's what we're going to ask you. We're going to probably ask you for a little bit more items than the other places, because I want to get you to the point where basically you're approved. We're going to ask you for your pay stubs, your W-2s, your bank statements, all this stuff. Okay. I want to have you basically pre-written and almost done when your offer is presented. Then what we're going to do is we're going to chime in on the chain of emails, and we're going to say, we are available at any time you need to give you any updates, but we'd like to just give you a little information on where we are with this client. They're credit approved, they're income approved, they're asset approved. So basically give me 10 business days, and all I need is an accepted offer, an appraisal, title, and give me 10 business days to get that closed. That's what we're doing with our clients. And a lot of our clients are now getting approved once we put this into place than ever before. So that's one of my big tricks there. You also your mortgage advisor has to know what they're doing. I get calls every day that people aren't returning phone calls. People aren't doing this. There's 3 or 4 times it went through and their loan didn't close. I had a Mr. Jordan in the Rockford area recently, and they came to me because they had 3 extensions that blew on their closings, and they got me involved, and we had it closed in 10 days. So I'm not saying that happens in all cases, but there's a lot of people out there that don't know what they're doing. And that's why I've done this over 30 years. All the loans basically funnel through me to make sure we're in the right program. We get you in the right rate, lock you in at the right time, and we review your fee structure. So that's one of the pieces of the puzzle that we do with you guys and for you guys. We also use a system called List Reports. So if you're a realtor out there and you want to find out more about that, please give us a call. The 800 number is right down below. So let's go through some more questions. I wish I could lock in my rate now below 3% all-time low, and don't want to miss that. My new construction won't be complete until November, and also surrounding lenders only have a 75-day rate lock. Okay, so that's another area where we might be able to help you. About half the country, we offer what's called an extended rate lock. Okay, it's called Secure Lock. It'll allow you to lock your rate up to 1 year. Okay, so let me give you the backdrop of it. I'll give you the pros and the cons. The cons are this: it might cost you maybe a half a point or a point to lock in your rate. Okay. The rate's going to probably be cushioned by about 0.125 to 0.25. Okay. Because you got to think, we're hedging our money for a year out. Okay. So there is costs involved for that. All right. Let me give you the good news. The good news is the money you paid up front to lock that in, you're going to get half of that back as a rebate at closing. That's one. 2, you have a one-time free float down. So let's say we locked you in. Let's say the going rate's 3, and for that extended lock, we're at 3.25. Okay. Now we push all the way out to November, and we're ready to lock. We're within 30 days, 60 days of closing, and rates, the country went to kaput again, and rates went to 2.5. You can have a one-time float down for free. So we'll float you down to 2.5, and you're good to go. So that's what I would suggest you do. However, on our side of the equation, we need your application in file. We have to get you in the system, get you approved prior to us locking you, because here's what happens when we lock in your loan. We actually have to hedge that money that we're giving you. So let's say you need $300,000. We're taking $300,000 from this bank account, putting it over here, and we have to pay the cost of servicing that money. That's why we have to pay. We're passing that charge on to you guys because we don't know how long it's going to take to close and so forth. So that's the caveat behind that. But the pros far outweigh the cons. Here's the one area that's tough. A lot of builders are offering these incentives that are nuts. So if you're getting those incentives, God bless you. I see them $10, $15, $20,000 in seller credits, but you have to use their lender. I don't know how that's legal. So if you want to comment down below or whatever, because you're basically saying, I'll give you this credit if and only if you use that company. That is basically the definition of steering. And you cannot steer a client to a particular company. Like I cannot steer you to a particular realtor. I can say, hey, this person's good, that person's good, and that person's good. But I can't say, I'm not going to do your loan unless you go through her or him. That's completely illegal. So I don't know how the people are doing that right now. So hopefully I answered that question. Let's see, Jeff. Thanks. I wish I know their government shutdown still. There will be a government shutdown. Wait. Okay, Jeff. We are in the same boat playing the game. We're buying a new construction home that will be completed in November. Okay, that's the one there's multiple questions for that one in there. So I think we hit a little keynote there. The next thing on here is HB. Your comments are, I get it, buddy. You're frustrated with the whole system and the whole government and everything, but I can't really do that. You have 731. Government can no longer sell treasuries. Government runs out of money by September. Fed will need to intervene. I don't know where you're getting your data there, but you're more than welcome to email me or something like that. I don't know how the government's going to no longer sell treasuries and run out of money. I don't ever see that happening ever. That's how our economy, our government's like a lot of us as individuals. We want instant gratification. We want it now, and we like to spend money. We're not a nation of savers, nor is our government. So there's always going to be, I feel, treasuries, and that's how the government gets their money. Okay, and so forth. So next thing is 2 years of employment before buying a home. We addressed that one. So again, here's the concern that everybody has. You worked, then you furloughed forever, and then you're kind of getting back in the working force. It doesn't go. Okay, it doesn't go. They don't want over a 3, 4, 6 1-year job gap. Why can you come out of college and do that versus why you maybe didn't work and now you're getting back in the working force? I don't really have the answer to that. My biggest frustration is when you have a housewife that stayed at home with their kids, and now the kids are in high school or whatever, and they want to go back to work, and now you want a bigger house and so forth, but you can't use that person's income because they've only been on that job for 8 months, but they are full-time now because the kids are older. Can't use it. Don't know why. Doesn't make any sense. I get it. Don't think of this mortgage process as always making sense or making common sense, because a lot of times it doesn't. But it's just the rules and regulations and the guidelines we follow are put in place because of the uncertainties and so forth. Like a lot of the disclosures. I don't know if you ever bought a house lately or refinance. The package is about this thick. Why? 99% of the paper in there is just a CYA. The lenders and everybody else is trying to cover their butts because of all the lawsuits that have transpired throughout the years and years and years and years. I remember back in the early 90s, a closing package was about this big. You'd be in and out of there in 5 minutes. So times are changing. Do you think 30-year mortgage rates may go down? I am planning a cash out refi. Great question. So let's go over here. I'm going to go back to, again, my screen share. So this is what I do on a daily basis. What do I think? Well, if you please tune into my videos every night, because we go in detail in what's going on here. So here's what I look at when it comes to where mortgage rates are going. I'm looking at the economy. I'm looking at inflation. I'm looking at job growth. I'm looking at a ton of things. So some of the areas that I focus in on, let me just go to the main page of this. This isn't a service. I mean, I guess it's a service that you can get, but it's a paid subscription. So what I do is I go in here. Hold on a second. And right at the beginning, and I post this every day, is we look at the economic calendar. What's taking place? Okay, what's taking place this week? This week is a big week in regards to the volatility in the mortgage markets. Okay, the reason being is Federal Reserve is meeting today. They're going to come out tomorrow with their decision, and then Federal Chairman Powell is going to speak. And I don't know if you've been on here for a long time or you're just coming on to the video, but what I'm going to show you here is this is what's going on with mortgage rates right now. MBS market's up 22. What does 22 mean? It means mortgage-backed price, the mortgage-backed security, it's a bond that trades on Wall Street. Its price is up 22 basis points. Okay, as the price goes up, mortgage rates come down. Okay, so right now we're on a nice trajectory. The good news is the last two Fed meetings, we saw this. And again, remember, down on this chart doesn't mean rates are going down. It basically is saying the price of the bond's going down, mortgage rates are going up. So we had that in the May meeting. We had it in the June meeting where mortgage rates spiked. We had a premature, debacle here a little bit. But right now, today, they're talking today and they're going to come out tomorrow with news. Being up 22 is nuts. So I don't, the trajectory right now is completely positive. So let me just answer in another way too. Let's say you're looking to lock in your rate. So that was a great question by whoever asked that question. Here's what I'm gonna counter back is saying, okay, here's what's happening right now. Mortgage rates are every day getting a little bit better. Okay, I'm gonna flip this around. Let's say you're looking to buy a stock, and every day the stock price is going down. Are you gonna buy it today? Is today a good buy? Is tomorrow goodbye? Well, here's what I'm going to do. I'm going to wait for this to turn, okay? And then I'm going to lock in, or I'm going to buy my stock. For example, if IBM stock last week was 110, now it's 100, and it's down another 2 points today and so forth, I'm just going to hold. I'm going to put it on my radar, and I'm going to wait. So that's what I ask my clients. I'm going to okay, I think rates are going to be here. You like today's rate? I'm not going to lock you in today. Here's why. Because you can see the trajectory right here is getting better and better and better. My goal for you guys is to lock you into the right program at the right time. Okay, that's the whole piece of this puzzle. So you might say, well, I'm going over here and I'm going over here. Here's what they're doing for you. Great. But are they locking you in today? I tell my clients, especially if I have a chart like this, I'm not locking you today. Even if you want me to lock you in today, I have to, if you basically deem it that I have to, but I would highly suggest we not lock you. But what I have to have is I have to have your file in our system. So when we do see this reversal, when we do see this, drop, I get an alert, and where we're watching this, you might see this drop, 10 points, 20 points. If this went to 0, I won't get hopefully you guys are understanding this. We're up 22 right now. So let's say rates got better by 0.1 today, okay? As of right now. If this drops down and we go to 0, I'm going to lose that. But it's going to take about a half hour for all this to go through the system and for our mortgage rates to get adjusted. So this is basically giving me a little crystal ball, and I'm ahead of the game. So if I see this automatically plummet, I'm going to go in and lock you. So I'm going to consistently ride this wave and getting you a better and better and better and better rate until we see a reversal. So that's that part of that equation. So let's see if there's any other, how often do rates change throughout the day? Great question, Alex. They can change 100 times a day. There is no set number that it can change or will change. Let me go back to you. So we follow this, this right here, but I can show you what's happening just today alone. It's like a stock. Remember I said, so throughout the day, mortgage rates got better and better and better and better. And then all of a sudden we kind of tapered off a little bit, stabilized, and here's where we are. So if this thing's going like this, theoretically, I'm sorry, you can't even see my screen. Let me go back to my screen. This is what's happening with the MBS market just today. So you can see the market kind of got better all the way through the day till about this time. 11:30, and then it kind of stabilized, and we're right here right now. Okay, so if this market is going just bonkers, we can theoretically change our rates 10 times a day, 20 times a day. Normally In a normal world, they change maybe once a day, twice if there's huge volatility. So great question. Thanks for the explanation. What is current rate you guys offer 30-year fixed 400K? Oh, great question. So let me show you. Okay. So another, there's a lot of rate questions coming out there. So let's answer those questions here. So what I post at the end of each day is what rates are doing. Now, this is a survey by Black Knight, and they survey lenders all over the country. And we send in our responses, and they compile all this data and come up with, where mortgage rates are. Okay. And again, this is the average throughout the whole country. The tough part is when somebody says, if you have the average rate here, a 30-year conforming at 3.02, when somebody comes back and says, oh, I just got an offer 2.25. Well, guys, it's like telling you that I just filled up my gas tank today with a gasoline that's 50 cents a gallon. You'd be like, no way. And I'd be like, well, yeah. And then the next thing is, well, I had to pay, I had to buy 2 cases of Diet Coke, 3 hot dogs, a pizza, and a hot dog. But I got it for 50 cents. Well, you kind of didn't. So a lot of times we do, when people are asking about mortgage rates and so forth, we say, can you send us whatever data you have? So-and-so lender offered me 2.25. Can I see it? Because what I want to do is, I'm not trying, I don't doubt you, but our whole goal here is to educate you guys. How much is it costing you? So if you paid $20,000 to get that 2.25 rate, and I could give you 3 at nothing, how long would it take you to recover those closing costs? I know 20,000 is excessive. I get it. But there's sometimes I see fees in there. I'm like, you realize you're paying $8,000 for that rate? It'll take you 40 years to break even, and your mortgage is 30. So why are you paying that much money? So that's another area that we really want to strongly focus on. But, mortgage rates, where my mortgage rate is today, Mike, there's Mike Pat. If you could email me so I can quote, I don't know if it's a second home, your primary home, an investment property, so forth. So there's a lot of pieces of the puzzle that get involved with mortgage rates. So let's go over this, and then I will end it here because we've been on here for almost an hour. I wanted to keep it to an hour max. Here's how rates work. Okay, and this is why I can't really quote one particular rate, because there's a lot of components that come into this rate. Okay, the rate starts out as, here's the base rate is X. Okay, let's say it's 3. I don't know what. But now, what kind of property is it? Is it your primary home, or is it an investment property? Okay, if one of these components is riskier than the other, then there's an adjustment on that for risk by the bank. Okay, so your primary home, if you hit tough times, which mortgage payment, you can only make one mortgage payment, which mortgage payment would you make? Your primary home when you, your wife, 3 kids, and dog live, or your rental property? Well, I can probably say your primary home. So that is less riskier than your investment property. So if you're buying an investment property, the rate's a little bit higher. Okay, another huge component is your score. Is your credit score like the buckets we spoke about earlier? Are you 740 and above, or are you at 620? That's a huge difference in your mortgage rate. Okay. Is it a single family home or a 4-unit building? You might have qualified for that big 4-unit loan based on 3 rentals that you're receiving. Now you have 2 people that aren't paying you. You might not be able to make that mortgage payment that month. It's more risky for us. So that means, in essence, there's going to be a higher rate. So just those few things that we went over are 3 to 4 just pieces of the puzzle that affect your rate. There's about 20 more, believe it or not. So when it comes to quoting a rate, I'm not trying to not answer that question. What I want to do is, you're asking me as the professional what my rate is. I want to give you a valid number back, and I need the pieces of the puzzle to be able to quote you an accurate and valid rate. So that's that part of the puzzle. And then let's go with one of the last questions. And if you guys want to pop in a few more, I'll try to answer as much as I can. And then at 4:15, between 4:15 and 4:20, I will log off. You guys are more than welcome to. You can see at the bottom. You can reach us at the 844 number. You can email me. My email is D for Dan Frio, which is my last name, Frio preferredrate.com, or even check out therateupdate.com. You can go there. It has our phone number. Let me give you that real quick so you can have that. So when we're done here, if you have any more questions, feel free to call in, schedule an appointment, whatever you need to do. Here's our new website. So you can go up here. Here's our 800 number right here. If you want to apply, all you have to do is click there, and then you're on your way. It's going to take you about 10 minutes. And if you want to set up an appointment, you're watching this now and you're like, I don't have time to talk to you right now, but Saturday morning would be perfect. Just click schedule a meeting and set up the day and time that there is availabilities to. It's going to ask you if you want to do it via Zoom or do it by phone. You just let us know. And that day at that time, we'll either be talking to you via Zoom or on a phone call and answer any and all questions that you have. So that's that part of it. And then let's see. I have a question about fixed income. If somebody was on fixed income like Social Security, where they don't have a lot of income, but they own stocks, can they qualify using stocks as assets? Great question. So there's a couple components there that we might be able to use. So if you have a portfolio, a pretty large portfolio, you can do this if it works. You get dividends, interest, and distributions on your investments. We can analyze a 2-year period and see, do you have enough dividend and interest income on top of your Social Security to supplement for you to qualify for that payment? If not, there is a way to do it. I'm going to reference non-QM and just normal mortgages. Okay, non-QM is basically, I won't say the subprime loans of old, but they're the subprime loans, but better quality, because they're not going 100%, no income, no assets, no nothing, whatever. But there's a component in there that we can use bank statements. And in your case, we can use what they call an asset depletion. So we take the amount of money that you have, and we say there has to be enough there for 3 years or X, and we can base it off of that. Now, standard mortgages like conventional and FHA, as long as you're of retirement age and the money is in a retirement account, you can use that amount of money that's in there, take 75% of your portfolio's balance, take that and divide it by 36. Okay, 36 is 3 years. So we're saying take your whole investment value times 75%, take that divided by 36, and that's how much we can use as your monthly income to get you to qualify. Okay, that's just another question. That's a great question out there, though. I wasn't expecting that one to come through. So thanks, PHE. And then, why are you so against 10 seconds? And I mean 10 seconds showing up 15-year rates. Many people, I am sure you're locking in at 15. Do a quick side-by-side with the FIR 15. Thanks for considering. Why aren't you against spending 10 seconds? And I mean 10 seconds showing us 15. Oh, I get it. Okay, so why am I against showing you 15-year rates? I'm not. The analysis I try to do, and I'm going to show you this here right now. When I get this report every day by Black Knight, the normal loan out there, most of the loans we do are first-time home buyers, investors, so forth. Most of them are looking for 30-year terms because they want the lowest payment possible. But what Mark is asking is, why don't I quote a 15-year? Mark, like I was saying before, Mark, it's hard for me to even quote rates because there's so many pieces of the puzzle. And that's why I also don't post on a lot of websites, hey, my rate today is 2.99, because probably 80% of the people won't get it. And I'm not here to deceive you. I'm here to answer questions, to help you. I always say we're mortgage advisors. We're not your loan officer. We want to advise you on what you should be doing with your mortgage, what mortgage I would take out. Okay. So why I don't do the 15-year, because Black Knight doesn't provide it. And they go through 10-year treasuries, spreads, all this other stuff. If I showed you all this and all the other reports that I watch, you'd be baffled. But this is all the content that they provide me. It's probably the easiest format, and I get it daily at like 3 o'clock so I can do my YouTube videos. That's why I post this, just to give you an idea where rates are here. And then what I really am trying to have people do is call us. It's not hard pressure sales. It's not, we're not going to put your feet to the fire. We're going to say, and here's another thing we don't do. is this offer ends at 5 o'clock today. So if you don't tell us that this is what you want or you don't accept this, it's gone tomorrow. I don't do that. I always say, here's what we can do for you. Please think about it and let me know tomorrow what you want to do. Okay, think about it. Unless there's huge volatility in the market, we just saw the MBS market crash, and I'm like, I might reach out to you and say, I can lock you in right now. Here's where we're at. What do you want to do? I would suggest we lock. And that's what I think you guys are putting your faith in me when you do apply and you talk with us and say, okay, I want that rate. And I tell you back, I'm not going to lock you today. We're going to monitor this because my goal is to get you a little bit lower. So that was a great question there. And I'm going to go through the last one. Is any information on a 0.5% FIFA refinance ending soon? Yeah, it ended August 1st. It's done. So if you're applying for a loan and your loan locks after August 1st or later, what FHFA is, basically think of, there's two entities out there. There's Fannie Mae and Freddie Mac. I don't care who you use as a lender. Okay, let me just give you some basics behind this, and then we'll conclude it. When you're getting a mortgage, basically what we do on the mortgage side is we put all your information into a computer. We pull your credit, okay? Then we upload that data into Fannie Mae and or Freddie Mac. I use both of them, okay? There's Fannie Mae, Freddie Mac. It's not Fannie Mae Candy, it's Fannie Mae. It'll issue, we push your data into them. It issues then me a pre-approval or a referral. It doesn't say denied. Refer is basically a denial. So it gives me an approval, and then it tells me what I need to validate that approval. So say you're telling me, or I put in the computer, I make 50 grand. I have to validate I make 50 grand. How do I do it? Pay stubs and W-2s. I also say, my house is worth X. How do we validate it? An appraisal. Okay. I've never missed a mortgage payment. How do we validate it? Credit report. So you get my gist. We all use the same system. So it doesn't matter if you use me, Guaranteed Rate, Rocket Mortgage, Quicken Loans, Wells Fargo. We all use the same system. So if Quicken Loans approved your loan, I'll get it approved. Okay, here's one difference from a lot of different companies. We have no overlays, and I'll explain that in a second. When we run your loan through that system, and again, there's Fannie Mae, Freddie Mac, that's about it. It approves your loan, okay? There's things called overlays. Here's the biggest overlay that I see, FHA, okay? FHA truly, if you went through its guidelines, you'd be hard pressed to find a minimum credit score, the requirement, okay? I know FHA will do loans down to 500. I know it. I've done it. No lender's doing them anymore, okay? Once you get to 580, you now have all the FHA normal characteristics that you think of. 3.5% down, blah, 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 blah. Okay, under 580, you need more money down, a lower debt ratio, and all that other stuff. We'll get that to in maybe future live streams. We underwrite according to the findings. So we have one overlay of anything is we require a 580 credit score. Okay. You'd probably be hard pressed to find a lot of companies out there that are doing 580 credit scores on FHA. If you called 50 lenders today, you're probably going to get 20 that can do it and 30 that can't. The frustrating part about that is they might not tell you that it's an overlay, okay? Because let's say, for example, when I had a client call me yesterday, they're like, Dan, we have a 600 credit score, and our lender is telling us they need a 620 to do an FHA loan. So we just thought you helped us in the past back when. We're currently with this company, and so that's why we reached out to them. And I said, no, I can get down to a 580. And they're like, well, how can you do that? I'm like, it's an overlay. So your lender might have overlays, and that makes a huge difference. So if that person didn't reach out to me, they might be thinking they do not qualify for an FHA loan, and they stop looking and they stop their search, and they're really in need of a mortgage. So this mortgage helps them out tremendously. So we're able to help them where if they didn't call me, they just thought they were stuck and there was no hope for them. So that is it for today, guys. I greatly appreciate everybody on here. If there's any questions that I didn't answer, please feel free. Give me an email. It's dfrio@preferredrate.com. I'll answer every email. Go to my YouTube videos, check those out. Click the bells. Give me a thumbs up. Click the bells every time I post a video. You get an alert, and put any comments in there. And I answer every comment in there that's commentable, if that's a word. There's a lot of people that give me, crap about this and that, and then others are, post cryptocurrency stuff and whatever. But if it's a legitimate mortgage question, I'll be more than happy to help you. So that's it for today, guys. Just make sure tune in every day at about 5 o'clock Central Standard Time. I do what's called the rate update, and we go over what's going on in the mortgage-backed securities market, any new news out in the world, in our economy, and especially in regards to real estate. What the real estate numbers look like, what inflation numbers look like, what unemployment numbers look like, what the trends are with the MBS market, and much, 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 much more. My whole goal is to educate you guys, earn your trust. I'm not just that place that's going to give you, you click buttons and you get no frills and you probably get terrible service. We're going to provide you great rates, great cost, put you in the right loan, right time, lock you in, and make sure you're on your way. And you're a client forever. So we monitor your mortgage behind the scenes. If there's a spot where it's like, oh, this would really make sense for you to refinance, we'll reach out to you. You don't have to do it, but this is just one of the services we offer for you guys. So that is it for today, guys. Please make sure you check out tonight's video. We're going to go over what happened with the mortgage-backed securities market. Hopefully it didn't plummet. And please comment down below, share the video, help it any way you can. We got just hit 15,000 subscribers and over 1 million views. So couldn't do it without you guys. So thanks again, and look forward to hearing from you guys. So if you're in need of a mortgage, please get a hold of us. Take care, guys. Bye-bye.